Hello and welcome to the EnerNova Partners Energy Market Update for March of 2024. My name is Doug Schaefer and I am the Director of Client Strategy for EnerNova Partners. And, over the next 10 to 15 minutes, I'm just going to take you through a bunch of slides and talk about what's currently going on in the market, what changes that we have seen since our call last month. The first thing that we're seeing right now is we've seen a big upward trend in natural gas and power prices. You can see from this sampling, we have Henry Hub and then some different electricity points around the US, increases of, anywhere from 12 to 20 plus cents in natural gas for the calendar strips. And, anywhere from, it looks like $1.67 to as high as $4.81 increases on the power side. The main thing that we have seen, since our last call, there's been a lot of headlines jumping out in the, in regards to the current energy market. Here's a sample of some, and you can see, gas prices jump as top U.S. driller slashes output. U.S. power to reach record highs in 24 and 25. More companies announcing that they are cutting production. And then also we're starting to see the weather change from the current El Nino pattern, which has given us a very mild winter, is turning into a La Nina pattern. And that's going to have some impacts on the summer and on prices. So to kind of jump into this, what I wanted to do was just kind of go over some current market fundamentals, talk about, whether that fundamental is bearish, holding prices lower, pushing them lower, or holding them steady, or whether it could have a potential bullish impact. The first thing we want to talk about is just short-term weather. We're seeing a little bit of cooler temps coming in that is pushing natural gas prices and power prices a little bit higher. But overall, this one little blip, and then we start to warm back up. I don't think it's going to cause that big of a movement. The biggest thing right now is, for the most part, winter is pretty much over. We've experienced the warmest winter since 1950, and has put a lot of downward pressure on the markets, has really reduced demand overall, and allowed us to get to a surplus of natural gas in storage. So what we're starting to see weather-wise now is that the market is going to start to focus on the summer. Forecasts right now are still, pretty early. We expect to see, I'll say better forecasts starting to come out probably in that end of April, May timeframe. But early forecasts are kind of calling for the US to experience above normal temperatures. The current La Nina watch that is in place, if we start to see that transition, it generally leads to more drought conditions in the West, which can impact, that kind of starts to heat the air up as it moves across the country and kind of can push temperatures up across the US, and can also lead to some, more intense hurricane activity. So again, a lot of time between now and then, and we'll just kind of continue to watch the forecast and see how it plays out. The next thing we'll talk about natural gas. This warm winter has, really allowed a strong surplus of natural gas to be built up in storage. We're currently, we have 336 BCF of more natural gas in the ground this year as compared to last, and 629 BCF higher than the 5-year average. Again, all that excess natural gas, when you look at things from a supply and demand side, a lot of supply in the system right now, and it's really helping to keep prices in check. Over the next 3 weeks, we expect that surplus is going to continue to grow a little bit. We're expecting to pull 75 BCF less out of the ground than we typically do. So we'll see that surplus start to grow or continue to grow over the next couple weeks. Natural gas productions, as you can tell by the headlines, we had 4 or 5 different producers all came out and said that because of the current market conditions, current market prices, they are not making any money. So they're cutting production and hoping that that lower production will help to eat up that supply glut. And then eventually, if their actions work, we should start to see some additional upward pressure on the market. But you can see on the right side of the chart from last month to this month, we were right around 104 BCF a day of production. And right now we're hovering around 100. So if we see some strong demand this summer, we could eat up that surplus pretty quick. Again, just drilling activity. Again, with those production cuts, we're seeing less natural gas rigs being deployed and less wells coming online. So we've seen a drop of 5 rigs on the natural gas side. However, with the strong price of crude, oil rigs are up 13 rigs since our call a month ago. And the one thing that can kind of play and work against the natural gas producers is typically with an oil well, you have some associated natural gas that comes out of that well. So that will definitely reduce, some of those production cuts, and we'll see to what extent these new oil wells will have on the natural gas markets as we go forward. Natural gas demand, I believe I touched on this last month. From the LNG side, we continue to expect to see that growth over the next roughly 3.5 years. Those orange increases, additional 5.5 BCF per day of demand this year, followed by another 3.5 BCF over the 2 years after that, and then additional 4 BCF a day by the end of 2027. So again, as that demand side grows, if those production cuts remain in play, less supply, more demand is going to push prices higher. NYMEX Henry Hub, you can see since our last call on the right side there, that jump that we've seen, that roughly 20-cent increase in Cal 25, and then anywhere from like 10 to 15 cents for 2026 and 2027. And again, I like to look at things in that basic form, supply and demand. And as that supply goes down, it's going to cause prices to go a little bit higher. Natural gas producers are doing everything they can to get this price propped up. Because like I said, at these current levels, they are just not making any money. So a lot of times, people will ask, why does natural gas come into play when we're talking about electricity? And with this slide, I just kind of wanted to show you that you can see that 43% of all electricity is generated from a power plant that is burning natural gas. And those plants are the ones that are setting that marginal rate for power in the hourly markets in basically every region of the country. So there is typically a very strong correlation that as natural gas prices go up or down, power prices follow. We've started to see that break apart a little bit over the last couple months. Power prices did not have that strong of a decline that we saw in the natural gas prices because of this mild winter. And there's a couple different factors coming into play there. Increasing demand on the power side, a lot of new data centers popping up around the US, and they consume a lot of electricity. So you have that demand growing. You have projections for reserve margins are declining in most regions, which means, as the peak demand for power grows, there's less generation to meet that. So that creates a situation where you could see some severe price spikes. You could even potentially see some rolling blackouts depending on what region of the country you're in. So just a quick look at power prices. This is for PJM, which is pretty much Pennsylvania, Ohio, New Jersey, Maryland. Again, you see on the right-hand side, those prices moving up, with the gas markets, with that increase in data centers, with that increase in demand, and then also the shrinking reserve margins like I talked about. Also, you see a very similar play in ERCOT. This is the Houston zone, but for the most part, all the zones in Texas have reacted similar to what Houston is going through. And you can see there's just been that steady, increase in power prices down in Texas, starting from basically the middle of last year. So the biggest thing going forward, and probably what we want to stress the most, is, to have a strategy. Understand, based on your risk and reward profile, where are the markets at? Where should you be buying? Having that picture so that you can see and have a good understanding of, should I buy, should I wait, and what it means. If I decide to wait, what's the possible gain? What's the possible loss I could experience by waiting? And that's why you really need a good energy advisor that can lay out these risks and help you develop a strategy and help you execute that strategy, going forward. So I know I covered a lot of information in a very, walk you through the presentation again and answer any questions that you may have. Thank you for your time.